Rise. My next guest says investors should really focus on yield, particularly from dividends. Jamie Cox is managing partner of Harris Financial Group. Again, Jamie, I understand that both the appeal, dividend income is more important than ever, has to compete with, yields from other sources. But at the same time, it doesn't look as generous as it did 6 or 12 months ago. So you're focusing on dividend growers. Is that right?
Yeah. So, Kelly, there's a couple of things that have changed over the past couple of years. In the last 30, for example, there's been a negative correlation between high dividend paying stocks and the bond yields. So bond yields go up, the high dividend paying stocks sell off. But over the past 2 years, that correlation has become very positive. We're all of a sudden seeing, the yields on these stocks in these high paying stocks actually go up. And so I think it can be explained partly because interest rates are coming off a low base. But it also has to do with some of the sectors that these high dividend paying stocks now represent: mining, energy, materials. And I think that's where you're starting to see this break away. So in 2021, for example, it's a bumper year in dividend payouts for mining companies like Rio Tinto, which you cited before the segment even started, had a 9% yield. And what we're seeing in a lot of dividend paying companies now is, instead of these companies that have a lot of commodity exposure, where there's a really lumpy cycle where they go with these progressive dividend payout plans where they raise them and then the commodity cycle shifts and then the companies cut the dividends, which investors don't like.
Right.
These companies are finally starting to do the dividend payouts in a smart way, where they start with a low base and then offer either special dividends paid once or twice a year, or a dividend payout ratio where they target earnings or target a certain operating metric. And that's really becoming, it's actually making these companies more investable from a dividend standpoint.
So it's funny because the examples that you brought, you have a couple of, let's call them sort of commodity materials names and a couple of financial names. The financial names are behaving more like I expect dividend payers, where, JP Morgan down 20% year to date. Okay, it pays 3%. Great. ING down 27%. Okay, it pays 7%. But you're used to that give and take. What's really remarkable is that Rio Tinto is up 23% this year and paying 9%, that EOG is up 38% this year and paying 2%. What are investors missing if they pile into these stocks right now?
Well, I think you're basically saying that the commodity cycle is just having a heyday with inflation, right? So you're seeing a lot of that, a lot of these companies making bumper profits, and they're starting to, trigger the payout ratios at higher and higher rates, these dividend payouts. And I have a feeling you're going to see them go up. So from an investment standpoint, if you're looking for dividends, throughout 2022 until the commodity cycle tops out and starts to decline, you're probably going to be fine owning these for a while. On the banking side, which you cited, you have so many other factors at play. You have a government involvement, which restricts how much they can pay out. You have, issues from abroad, like the conflict in Ukraine, where you have all these really weird things that come out of left field. So I think that if you're looking at bank earnings, Bank of America just indicated today, the U.S. consumer is very strong. It seems like housing is just fine. So if you're looking at consumer banking, JP Morgan's a very good place to be. It's why you see banks up today, even though you did see quite a bit of decline in their earnings, year over year because of the conflict in Ukraine or some of the other trading differences that you saw year over year. But I do think that financials still represent a very good place to be if you're looking for dividend yield, and it's much more constant there than it will be in the mining and energy